Thank you for being here. I think the biggest question I had when we were planning this conference was, in the afternoon in Jackson Hole, is there going to be anybody in the conference center? Because, if it were me, there's a strong temptation to be out hiking or rafting or fly fishing or something, but grateful that you all are sitting here to listen to Jenny, not to me. So I'll stop talking, but it's great to be here. It's a pleasure to have Jenny here, CEO of Franklin Templeton, not the head of digital assets of Franklin Templeton, although Roger is fantastic as well. This is the CEO of a $1.6 trillion asset manager out front talking about this industry and leading this industry, which is inspiring and very, makes me very bullish when I talk to you and your team about what you're doing in the space. So very grateful, from an industry perspective that you're doing that. I'm very grateful that you're willing to take the time to come out to Jackson Hole and talk to us. But the name of the panel is Investing in Digital Assets and Tokenizing the World, which are all things that you guys are doing at Franklin Templeton.
It's narrow.
Yeah, exactly. Very narrow, but I think it's broad because you guys are doing so much in the space. And when I talk to your team and I hear about everything that you guys are doing, again, it makes me extremely bullish on the industry and gets me very excited. But the thing that I'm so interested in about Franklin Templeton is that a lot of traditional asset managers still sort of thumb their nose at digital assets, in my opinion. I know we just had an executive from BlackRock, an executive from Morgan Stanley, but there's still a lot of companies in the space that aren't ready to dive into this and still have an air of skepticism around digital assets. But you guys have not had that skepticism, and you've been out front again in this industry. When did you have that aha moment that caused you to think, okay, let's be first here. Let's not wait for everybody else to jump in, but let's show leadership in this space?
And I think, so just a little bit on my background, I had run technology and run the operations groups at Franklin Templeton. And so if you look at, honestly, what some of the biggest problems that technology person has is reconciling data between systems and the latency of data, right? And so think about a transaction. We've got to reconcile a bunch of that data between different systems. And if you're going to go pull it from the system, you got to make sure that it's updated. Oh, and then you got to reconcile it with the counterparty who's also got the same thing. And we've got hundreds of people whose sole job it is to reconcile data between systems. And it's everywhere throughout financial services. So intuitively, when I learned about the technology and it came, kind of the team was talking about it, not a woman who now works with us, Sandy Call, had been with Citi at the time, and she ran kind of this program on the future of the blockchain. And I was like, wow, this sounds pretty interesting. But I was very skeptical about whether or not my team teases me about my quote where I said, look, I think this is going to be really important, but it's going to be my grandchildren's problem. It's not my problem. And over time, they kept pushing to say we should try some things. Let's I can't remember kind of the order of it, but I think we were buying loans from a blockchain HELOC provider. And in that, they asked us to be node validator. And then when we started validating nodes, you started to realize, wow, you really are getting to see some interesting information about transactions. And oh, by the way, you're going to have inflation of your coins if you're not staying in the system. And so you started to say, wow, we better be part of that ecosystem. And then we ended up deciding to do a tokenized money market fund. And we were the rare asset manager that actually ran our own shareholder record keeping system. Most people outsource that. I think Fidelity's probably the only other one that actually does it. And when I was running technology, we actually had 4 of those systems globally. And so I knew a lot about that. And when we decided to do the tokenized money market fund, we ended up building this transfer agency system. And the SEC, when it approved it initially, they required us to shadow process on the blockchain system as well as our own system. And we were astonished by the efficiency and costs. We built it on the Stellar platform, and I mean, astonished. And that's when I just became a believer that, this not only is more efficient from the not having to do the reconciliation, but just the cost driver. We're in an industry that we're constantly getting cost pressure. So that's when I really became a believer in it. It was, I'm sure my team would say, a slow process that they dragged me through.
I like to think about Franklin Templeton sometimes as the largest family office in the world. $1.6 trillion, third generation leader of the business. How does the fact that you guys think so long-term, multi-generational, how does that affect your view on digital assets and encouraged you to be forward thinking in this space?
Yeah, so my grandfather started Franklin Templeton. I think that, and we're a public company, but the family still has enough stock that we can probably deter most activists from running at us. And I jokingly say, but deep down I have this true fear, that the fourth generation will say, we had a really good gig until Jenny became CEO and she missed that obvious trend, whatever that trend is. And so, to me, kind of the two big ones right now are obviously blockchain and AI. And so I say that I try to spend my time with like 40% with clients and trying to raise the profile of the firm, 30% on day-to-day. If I have the right management team, I shouldn't have to spend more than 30% because they should be solving things. And then really 30% on disruption and looking for those things that honestly may not, and if you think about the tenure of most public company CEOs, it's not that long, right? And I think about the things that we're doing in blockchain, and I'm not sure they're material to the firm, say in the next 5 years, as far as meaningful from a revenue and generating income. And so if my tenure as a CEO is 5 years more, I'm probably not going to spend my money, on that. I'm going to be focused on getting the quarterly earnings that I can. But I worry about how the company gets positioned for the next generation. And so I think that just gives me a certain amount of almost a luxury, honestly, to say, let's invest in these things. And it's been one that early on, I don't think I would have believed, honestly, the pace. I mean, what's crazy to me is that in the traditional finance, they have no idea about the amount of money and the volume. When I tell people, Bitcoin in 2022 had $8 trillion, I think it is, in transactions. Visa had $6 trillion, and MasterCard had $2.5 trillion. Like, just think about that. And there's an entire ecosystem that almost ignores what is kind of a parallel whole massive ecosystem. And so I think it surprised me that even these two things are sort of continuing to evolve and only kind of touching a little bit at the edges.
So you touched on that tokenized money market fund that you launched in 2022. It was the first of its kind, way ahead of its time. Today is about $500 million in assets, which is fantastic. BlackRock, again, Joseph Shalom was just up here talking about everything they're doing. They launched a tokenized treasuries fund that has several $100 million in it as well. What do you think? And those are really the only two products in the marketplace from big established asset managers. And going back to my original question, what do you think is holding back some of the other major institutions in traditional finance from launching tokenized products, from investing more in the space? And when do you think that will change?
I mean, I think it's a few things. I think, number one, I think there's a lack of understanding around the infrastructure and how it really can be more cost effective. I mean, I often say to people, look, ETFs and mutual funds are ultimately going to be run. They're going to be tokenized because you just can't avoid the difference in costs. But just think of all the toll takers who take a little piece of that transaction, custody fees, transaction fees, right? Like, there's a lot of incumbents who actually aren't so keen to move quickly into having it be disrupted. So that is a reality that exists. That's one. The second thing is, you can't hold a tokenized asset without a crypto wallet, right? And that isn't embedded, in traditional people's investment accounts or savings accounts. And if you have say, an account in Coinbase and you're holding it there, we've all seen kind of the regulatory challenge, which I'd say is the third, where, you haven't really been able to combine what is the unregulated sort of the blockchain crypto world in the regulated world. And so that's slowed things down. And I think in the jurisdiction, I mean, kudos to Wyoming, who I think has really been on the forefront of this. And I also have a lot of respect for the difficulty of the SEC in trying to figure out what you call a security. Our money market fund is clearly a security, right? Honestly, it's not that different. And as I remind people, when we ran 4 different transfer agency systems, nobody ever asked me what programming language they were written in until it was written in blockchain. And so that's a security. But then there's this gray that comes, and it's hard because regulators want to deal in certainties. They want to be able to have very specific rules. But I think that's absolutely slowing down the pace of progress.
One of the things that you touched on is the fact that you guys don't outsource most activities within the firm. You try to build when it's possible and makes sense. You try to build yourself. And Franklin Templeton, I think people don't, or at least I didn't have a full understanding of this before we prepared for this conversation around everything you guys are building. You're building wallet infrastructure, you're building transfer agency infrastructure, and you're running node operations, and you're participating in staking. Could you just talk about the full breadth of what you guys are building there at Franklin Templeton across your digital asset activities?
Sure. And actually, I'd correct you. My view is you should outsource it if it's essentially a commodity. The reason we ran our own transfer agency system historically is Templeton was really the first global investment management firm. And we were in all these markets that the service providers weren't in. And so we had to run and build the capabilities there. And so we ended up building this huge infrastructure. We have now actually made the decision to outsource that recently because honestly, the service providers have now caught up on that. However, when you come into the digital asset space, when we were first looking to launch the tokenized money market fund, there weren't service providers out there. So we said, okay, we need to build this. And then as I mentioned earlier on staking, look, I think if you're going to be participating in this space, people are going to have to be staking. It's going to be part of how you're doing it. I think regulators are going to end up staking because they're going to look at it and say, wow, this gives me unbelievable transparency into the transactions. If I need to regulate, the best way to do it would be to be staking on these platforms. This is where I think the regulators haven't quite figured out that you're in this space, there's actually more information that you're going to be able to give you more transparency around regulation because the open nature of this. So today, to answer your question, we have the Tokenized Money Market Fund. Again, we built that infrastructure with the view that we will launch other products on that. We have a venture capital fund, so we invest in startups and have that offering publicly. We do advice on coin portfolios, so we have anything from systematic to really, really active management.
All types of SMAs for different clients.
Exactly, SMAs for different clients. And then as you know, we do the staking. I feel like I'm forgetting one thing, and I think we're staking now on 12 different platforms.
Well, that's pretty good. An interesting view that you guys have that I think that you don't share with some other institutions that are thinking about building in this space is private versus public blockchains. You hear about all these institutions, they're sort of wary of public blockchains and everything that comes along with that because I think they don't really understand it. So they want to build these private permission blockchains. But what's your view on sort of these private blockchains versus building on public blockchains?
So first of all, water's going to run down the mountain no matter how many times you try to block it, right? You have to understand where something's inevitable. And I look at it and I say, well, first of all, if I'm one of those toll takers, the first thing I'm going to do is try to convince my clients why my private blockchain is really important because then I can preserve as much of my economics. But I think the best example of why this is not, and let's remember, FTX would not have happened, I don't think, had it been on a public blockchain. You would have seen those transactions going to Alameda. The community would have said, something's fishy here. So
you can track the wallets. I mean, the money was moving among a tangled web of entities that they controlled.
Exactly. Yeah. And there's enough people who will do that. But I think the Ethereum switch from proof of work to proof of stake is the greatest example of why the public blockchains can be more important. Because just imagine, anybody who's run technology projects, you got a project manager and you know who's responsible and you do the meetings and you got a schedule and it always goes over budget, right? Like I probably count on one hand the number of times it was actually under budget. Every one of those companies that was on the Ethereum layer 1 blockchain got this massive IT project, which, oh, by the way, it may have been late, but it actually went off really without a hitch and no bugs. And there's nobody to pat on the back and say, you did a great job. Like the community did this. So if that's going to be the infrastructure and you build a business and you can get upgraded like that and it doesn't cost you anything, how are you going to compete with somebody who has to charge in a private blockchain?
All great points. You have made a very ambitious statement about the fact that you think all ETFs and mutual funds eventually will be on blockchain. What's the timeline for that? What are the obstacles to making that happen? And just how do we get there?
Look, again, it comes down to this infrastructure, and it's hard. Where these things tend to go is you tend to get pilots that nobody pays attention to. Is kind of happening over here, and it replaces a piece of infrastructure, and then another one over here, another one here. And then suddenly they start to connect to each other. And people go, how did that happen overnight? And you see some of those pilots happening. Enbridge, which I guess is it's been progressively moving, which is a central bank, kind of Asia, Middle East, where the central banks have agreed to build a Enbridge blockchain where they can exchange currencies amongst themselves and have atomic settlement. I don't know how you say it, but finality or whatever. It's like they're trying to do atomic settlement on securities in Europe, and they've got 10 partners that are involved in figuring that out. And these are all little pilots that are experimenting, but over time, they actually start to replace the incumbent's infrastructure because ultimately the incumbent can't compete. So it's hard to know. It's always the hockey stick, right? Like there's going to be a lot of things and some aren't going to be successful, and the naysayers are going to say, see, I told you it was going to work. And then others are going to work, and they'll have reasons why. The naysayers will say that still doesn't really matter. And then they'll start to connect. And that's when you'll start to get the things like ETFs that are run on chain going to be able to be offered at a lower cost because the cost to run them are less expensive.
Shifting to regulation. So it's the topic of the day. We have Senator Cynthia Lummis from the great state of Wyoming speaking with Senator Tim Scott tomorrow, who, if the Republicans take the Senate, will be the chair of the Senate Banking Committee. Both have taken a keen interest in this industry, but obviously everybody would like it to be as bipartisan as possible. But in general, what do you think is the best path forward from a regulatory perspective, and how close are we to achieving that based on the current discourse?
I mean, it's interesting because in different places across the globe, the regulators have taken a different approach. And so in Hong Kong, for example, they're very prescriptive. Like, if you do this, you're good. Which, by the way, as a regulated entity, we really like that, right? Just tell us the rules and we can follow them. Then you go to Singapore, and Singapore's, created this sandbox, and they're saying, hey, listen, we don't really know how to regulate it, so we're going to give you, as long as you're in the sandbox, you can get a project approved, and we'll give you kind of a pass on regulation, and we'll keep an eye on it. And they've got other regulators who are participating and learning from that. And so that's kind of, I think, a really productive approach. The Middle East is a little bit more in between. They've got, some sandboxes. They've created some amount of certainty. Their challenge is you have to be kind of based there, so domiciled locally, because they're obviously trying to create jobs. So those are all interesting approaches, and I'm not sure which is going to be the successful one. I do think, for all the reasons that I've mentioned, the number of folks who have influence on the infrastructure are going to naturally try to slow it down. You have these pilots that are going on. Ultimately, they will convince regulators that this is safe, and they will start to link up to each other. But again, I can't predict the hockey stick.
So, last question as we wrap up. We're here in the shadow of the Federal Reserve. So the Federal Reserve Economic Symposium getting ready to happen at Jackson Lake Lodge, just north of us in Grand Teton National Park. And when I talk to people in government, whether it's the Federal Reserve or the Treasury, they say, yeah, but the rise of Bitcoin and digital assets, it chips away at U.S. dollar hegemony and dominance that allows us to be the world police, to impose sanctions and all these things that we think improve our national security. How do you respond to critics who say that digital assets are degrading the dominance of the dollar, they're used for illicit purposes? What's your response to that accusation?
So there's a couple of things there. One is, I actually think in many ways stablecoins have, they're backed by the dollar or U.S. Treasuries or something in most cases, especially after the blowups that happened when they weren't backed by the dollar. So actually probably has driven assets to the dollar and strengthened the dollar and been a factor there. Look, I think the whole black market question, as the regulation becomes more clear, and let's face it, as people open crypto wallets and as they become more mainstream, they're going to be AML KYC compliant, just like I think if you open one on Coinbase, it is. And to the extent that it flows through those types of wallets, you're actually going to have more. Remember, once a transaction happens, it's on the block forever. You're actually going to have more visibility into what's happening. And so I actually think people will start to understand that this is a better way to, one, governments are going to love it because they're going to be able to tax you. They're going to be able to find those transactions and be able to go back and look for them. And so I actually think it's a great defense ultimately from what happens on, in some of those nefarious transactions. And they were happening before Bitcoin. They're hard and people will always find ways to do things. But I actually think this will be, over time, as it becomes more mainstream, you will have less of it happen.
Well, thank you so much for joining me, Jenny, and giving me the opportunity to moderate this discussion.